So, hello, and a massive hello to everybody. How's everybody doing? Hope we're all having a great day wherever you are, whatever you may be doing. This is 50 pips rocking and rolling here, 24th of March 2019. No trade calls, recommendations. You're responsible for your own stuff. We're here for educational purposes only. So, what's going on going to this week? So, should be fairly interesting. I mean, especially once you see the way we closed on Friday and what's happening across the board. Now, keep in mind that going into this week, as we've discussed before, and as has been our base case, we're going into a period which is not seasonally weak, right, for the equity markets, but we are going to get into quarter-end flows. We're going to get into the blackout period. And our expectation was for equities to trade a little bit heavy, and especially if they accelerated into month-end, quarter-end, we could probably see a lot of people trying to, not hold on and book some profit, so maybe a little bit of acceleration to the selling. Now, we'll still get an awful lot of headline risk this week with a lot more stuff out of Brexit. We still have this Mueller investigation. We'll have to see how everything plays out. For the moment, markets had a very tiny rally, which is not doing anything, sold off again. Now, we also have, we're going to have an RBNZ on deck. We're going to have a GDP release. So clearly there's a lot of stuff going on. Now, I think here the focus is just on how do we trade with respect to risk on, risk off, and how do we trade with respect to some of the trades we have on. I'll try and do some more videos to update, but here I want to be brief. So basically, seeing how we closed, sorry, the trading view is not working for some reason, so I'm going to be stuck here on the MT4. But if you see the way we closed here on Friday, so essentially the ES closed down about 1.9%. We had the YM down 1.7%, NASDAQ down over 2%, Russell close to down 4%. When you see this kind of low on a Friday, right, this kind of magnitude in an aggressive fashion, it's extremely rare that we do not retest the Friday lows on the Monday, and most often than not, we print a new low. These lows get taken out. Now, it doesn't mean you have to get continuation, but if you're thinking in terms of probability, in terms of what tends to happen, you're going into this week thinking that Monday we're going to take out Friday's lows. Whether we get continuation or not, we'll have to wait and see. Now, these selves are particularly interesting because you see how we traded through Powell and etc. We got this attempt to rip through the 78.6, rip through 78.6, rip through the 78.6, past these previous areas, right, where we failed from, and then couldn't hold the traction at these key levels. Now here, with the Mueller report out, and it looks like, nothing serious so far, this is the best possible excuse for the equities to rally if they're going to trade the way they've been trading on, positive, any kind of news, any kind of slightly positive headline risk as an excuse to rally. So what I would say is going to the week, you expect those Friday lows to get taken out, but especially if they can't rally on what we've seen out of the Mueller report, then expect the tone to have substantially shifted, right? So going to the week, level to watch, 2800 on the ES, the 73.23 on YM, and the 78.6, sorry, on the NASDAQ, and the 78.6 on the YM. Above, then you'd have to expect that last week's highs are going to try and get tested. But now what we have is a very tradable resistance to trade above if you want to stay short or be aggressive to the short side. And as we said, our preferred short is the Russell, right? We're still holding swing shorts on Russell, and if you had to pick, the YM was the weakest, and that's where you would have taken less heat. And we always try and trade off the weakest, not the strongest, if we're looking to go short, and trying to get long the strongest, not the weakest, if we're trying to get long, right? Now, the only way we would attempt to do this, and we can discuss this in another video, if you're trying to desperately, you have to get short the NASDAQ, as we discussed in the weekly webinars this week, then we would do that putting on a pairs trade or pairing it off with something like the YM, right? But we can discuss that in detail if anybody's interested. So again, going into the week, expect these Friday lows to get taken out, and then it's all going to be about follow through, but we have very clear resistance differences, lines in the sand from last week, especially also being an FOMC week. If we can't trade above those, we expect 2700s on the ES, 7,000 on the NQ, and 25,000 on the YM to attract. If we're looking at the dollar index, as we said, we kept on shorting into this level for moves back into the 96 and possibly much lower. This is going to be a key test going into the week, because if you see, this is a 50 back of the sell-off from highs. And what's interesting here, if you're looking at this on the daily, well, that 50 back, right? You've got confluence with the 100, with these cluster of moving averages. So right here, as long as we can hold here back below this level, you'd expect this to continue to try and move down towards that 94. If you can get a daily close above this 100, then you would expect those highs to be tested again, but our base case is still that we're topping and we're going to try and come back lower. We'll have to see how this play out. This is one of the ones that should be very, very choppy. And again, keep an eye on the DAX, keep an eye on the Nikkei, but you see the DAX selling off right into that 200, right back into the confluence of the two moving averages we're looking for. And here the control chart has really remained this weekly, which stays very, very heavy, and we expect those lows to get tested again. So looking at the currencies, just to update on our trades that we put out in the Monday video last week on into FOMC, just to be clear, the trade on the yen is finished, right? So structurally, we're still bearish this, because if equities roll, etc., that still goes into our base case. So we're still looking for yen to trade much lower. But our weekly trade playing on that end of the fiscal year on the FOMC, that's done, right? That was early into the week on the open. Short stops above the 1200, and the 1200 held. We're looking for 110 to print. That's done. Right here, it's only swings in play. Remember, this is going to be a very interesting level, just like on the equities. Just think of it in terms of last week's range. The weekly candle, the weekly range is the line in the sand. Anything that happens inside is chop. Above, uber bullish. Below, starts to get quite bearish. So that's done. On the Swissy trade, that trade for the bottom end of the ascending trend line here is still in play. We'll have to see how we trade here, but clearly the last pips can be the most expensive. So we would have more than happy to flat up towards the end of last week, where we couldn't get any traction on this break of this level. But right here, I'd say the percentage play on the trade is done. We'll have to see what happens. Clearly, we would not be initiating new shorts here. We'd be waiting for some kind of a bounce or partially trailing. And CAD moving along quite nicely. We posted this on Twitter too. Multi-confluence zone back into the descending trend line, number one, back into the moving averages, number two, back into the 50 back of the move from A to B, number three. You know, it's hard to find a better looking setup than this when you've got so many things all gelling. So right here, our base case scenario here is still that we're going to complete this fib move, or at the very least take out these highs, but the extension target on that is back into the 135.50s, and this trade is still in play going into the week. This is going to be key bull bear line. Now the other trade where we got lucky, got some heat but got lucky, was our selling into this approach of the 60 and the 200 on crude, right? Our base case was that this was going to be a fade zone, that we're stuck in a 60-55 range. We'll have to see how data comes. Clearly the data's been surprising. That's why we've had that ramp. If data doesn't continue to surprise in terms of draws, then you'd likely see this puke quite aggressively. But our base case is still, as long as this holds from a closing basis, we're looking for 55s to come into play. Now clearly on the way down to 55s, you've got all this zone here, right, into the 57.50s. That's going to be tricky. It's going to be a, you know, kind of mid-range-ish bull bear line. But you see what's interesting is, despite the data and despite how it's been trying to press higher. It really couldn't get an awful lot of traction, right? See, we started to stall here a little bit, and then so much action here where it would be a beautiful opportunity for this to squeeze into, and it just couldn't get any traction. It just broke down. So right here, don't underestimate the possibility for this to try to ramp up, but our base case is still going to be the same, is as long as we don't get a daily close above the 60, and we would not be trading this with tight stops because that's probably a little bit of a sitting duck, but as long as we don't get a day close above the 60, and we can discuss more ways to trade this week. If anybody's interested, send me an email. I'll go into more detail in the video, but as long as this doesn't hold from a closing basis, we're looking as intermediate target, right, back into this area, but ultimately for us to try and come back into 55, ideally data would help us on this move to get a little bit more acceleration. So again, going into the week, those are the key things we're looking at. I don't want to make the video too long, but it's all going to be on the reaction. Oh, before I forget, Aussie and Kiwi too, right? So we'd flattened up on our shorts, and we were looking to resell any failures into this trend line, right? We're looking for the week to give us a chance. We're patiently waiting for this to come back in, and this trade's in play because you see here on the 4-hour, very, very beautiful action. We come right back in, and then you get that failure, chance to get back short, and this trade is still in play. Now, it could take a little bit of heat this week. Also, keep in mind we have the RBNZ, but our base case is that as long as this descending trend line holds from a closing basis, we'll get a move back down into these trend line, and ideally we'd see this break for a much heavier tone to come in here. We'll have to see, but it's a far from an ideal zone, but so far it's working, worth a shot, right? And also on the Aussie, exact the same thing. We were flat on our shorts. We've been trading this to the short side from the beginning of the year. This is our favorite structural short. Also keeping in mind fundamentals, but we highlight that you have to respect this wall, right? So we flattened up on the shorts, and we patiently waited for it to come back up into those levels to get back short. And as you see here, we got really beautiful kind of signal, right? We come right back into the 2 moving averages, and then we get the negative daily close, getting you a chance to get short with a fairly defined stop and looking for this to continue back down. So all these trades are in play. We'll have to see how they move. If anybody's interested a little bit more in the management, but these ones should, you shouldn't be. It would be a sin to book a loss on these trades since they're all, they've played out, or you should be flat or just trailing, or for the ones who just started in a good position, having taken some off. So let me know if anybody has any questions. Let's see what we get, and wishing everybody an awesome week. I'll talk to you guys soon. Take care. Bye-bye.